The Dow Jones Industrial Average plummeted more than 2,200 points on Friday, following 1679 previous drop, marking its worst session since the start of COVID 2020. As Wall Street's bloodbath erased $6.4 trillion in market value just in 2 days due to China's retaliatory 34% levy on U.S. imports starting April 10th in response to Trump's reciprocal tariff plan imposing a 54% tax effective April 9th. The tech-heavy NASDAQ fell 962, 5.8%, entering bear market territory with a drop exceeding 20% from its December peak, while S&P 500 declined 322 points, or 5.97 amid global stock market descent, driven by fears that Trump's 10% baseline tariff with harsher rates for many nations could stoke inflation and trigger a recession, as noted by Federal Reserve Jerome Powell, who warned of a potential persistent risk in inflation. Brandon, your thoughts on this story?
Yeah, so a lot to cover here. So, I mean, first and foremost, I'm super happy that the market's starting to go down. I think, honestly, people are going to hate this, but I think the best case scenario for the most people would be if the market goes down by something like 50%. Because
50%?
Yeah, because, I mean, 10% of people own 90% of the stock market. So, like, the vast majority of people who own the stock market are, the top 10%. And, 50 years ago, I looked this up. So, like, what would you guys imagine it took for amount of hours worked to buy a share of the S&P 500, say 1970? What would you guess?
20 hours?
Yeah, no, exactly right. Actually.
Is it really?
Yeah, right. Spot on. You know what it is today?
60.
170.
To what? To do what?
To buy one share of the S&P 500.
You need to work 170 hours today to buy one share of the S&P 500, but you had to work 20 hours 50 years ago to buy a share of S&P 500. I have my opinions, but I want to hear it. Keep going.
Yeah, no, so I mean, we've, and this goes into what we did with China. Like, so when we got off the gold standard, when we started offshoring our jobs to China, that's where the wealth gap really widened between the working class of America and, the people who run companies in America, like, because profit margins got bigger and then wages didn't keep up with the stock market growth. So we've essentially, like, decimated our middle class. And, for young people too, like, I've been waiting to buy the dip for 15 years now, and there hasn't been a dip to buy. Some people might say like COVID, but that we just pumped money into the economy right away. Some people might say 2008, but we did quantitative easing right away after that. So
Brandon, how old are you?
Just turned 30.
Just turned 30. So 15 years was 15 years ago.
Yeah, I've been waiting to like really feel like I could buy the dip for 15 years, and it hasn't come.
At 15 years old, you were looking at investing. Good for you.
Thinking about it.
Yeah. So a part of what you're saying is the gap between the poor, middle, upper, and the rich keeps getting wider and wider and wider, okay? And you wanting to see a massive market crash taking place, maybe a correction, for you to get in so you can get at a decent price. That's kind of what you're talking about.
Yeah, and so that everybody could, and keep in mind too, the market is way higher than it should be. Like essentially, the boomers,
market's higher than what it should be.
Yeah, the boomers and Gen X have essentially stolen the future from the millennials and Gen Z by pulling wealth forward to themselves that belong to the future.
Right.
So it's 36 trillion. Like all the deficit spending we do, that's been pulled from the future away from people who haven't even been born yet and put into the stock market essentially.
Tom, what do you think about this?
Well, I think whenever you have an equation like this, and thank you for doing the research, that's good. So the number of hours was 50 years ago, right? Mm-hmm. Was 20 hours to buy one share of S&P. Today, with S&P at 520 or 490 or wherever we are floating around right now, takes 170 hours. So that's 8.5x, right?
Right.
What was the PE ratio of the S&P going back then?
It's usually in the ballpark of 20 to 30.
Okay. Well, actually, under Jimmy Carter, it was 7 to 9. And under Ronald Reagan, it was 10 to 13. Mm-hmm. That was the PE ratio if we want to go back that same time. In January, the PE was 29. And right now, the PE, and I'm saying of the S&P, is 24. So wages is the problem.
Yeah.
Because it's 8.5x in a number of hours. But the PE ratio is barely 3x, and actually 2x if you just go from Reagan from like 10 to 13, that would be 20 to 26. Well, right now it's 24, and it was 29 beginning of this year. You go back to 2016, it was 22, 24, 25, the 3 years going into COVID.
Yeah.
So I think you make a point, but it's not that the market is too expensive. It's that overall that time, wage growth for the middle class did not keep up, and as a result, an 8.5 difference in the middle class number of hours when the PE ratio is really only doubled plus.
Yeah, because that revenue has gone to corporations that have offshored their jobs and saved a ton of money on production costs instead of going to decent paying jobs. So I think like that the tariffs are going to solve two problems at once. It's going to bring the market down to a reasonable level, and it's going to bring better jobs back to America and pull some money away from corporations because they've essentially like taken money from the workers to themselves by offshoring these jobs.
Let me ask you, when you did 50 years ago was 20 hours, was that 1970 or 1975? Because that's a big difference.
1970, and then it eventually goes to 40 hours worked, and then by the 90s it gets to 66 hours to buy the S&P.
So, okay, if we go in 1970, obviously a couple major events took place.
Yeah.
We've talked about this multiple times.
Right.
We went off the gold standard with Nixon. We allowed China to come in gradually, the whole ping pong, and then in the World Trade Organization, China gets involved. And then for us right now, like the supplies that we have, if you go on Trump's store, all his stuff is not made in U.S. You see made in China, made in Singapore, made in this, made in that. Why? Labor has to compete for us to bring a lot of the stuff here. You're like, what am I going to do? Am I going to have to compete? Because America is not known for a lot of the products to manufacture. We've went away from that. We need to get back into that. So somebody needs to sit there and say, how do I make that competitive in America? We've missed the mark there. And at the same time, the one thing once we went off of the gold standard, what happened? Debt became so easy.
Yeah.
So people could raise debt and take a business and grow it. And then, so if somebody has access to debt, somebody leverages debt, somebody risks with debt, the other person doesn't, the disparity of the wealth is going to get wider and wider and wider. The part that they haven't yet figured out is what to do with the median income, because that's definitely not growing. And that should be a concern because some of these guys cannot afford houses. So either income needs to go up, correction needs to happen, or people need to go and live in a rural, in a place that no one knows about and turn it into a next Frisco, turn it into a next Palmdale, turn it into a next whatever city that may be, and that's a valid concern.
Mm-hmm. Do you think that we have to compete with labor, though? Because I almost think that tariffs have to protect us against this cheap slave labor from other countries, because, we could compete with other countries in terms of putting tariffs on them when they have tariffs against us about labor. How are we ever going to compete with, like, Cambodia and China for labor? Because they could, essentially make people work at slave wages, but we're not going to do that here, so...
Well, once you open, in my opinion, once we open that up and we went into that space, do you know what would happen? So think about it this way. When everybody says Trump's for the rich, okay? You said something earlier. You said 90% of the equities is owned by what?
10%.
10%.
Yeah.
So who is Trump really hurting?
Yeah, he's hurting the rich.
He's not hurting. He's hurting the rich.
Yeah.
So the rich are the ones. Even Musk is a little bit like, hey, I don't know if you have that clip, Rob.
Yeah, he doesn't like them.
Let me read this and then. Musk breaks with Trump on tariffs as he distances from the White House. Now, whether there's truth on this or not, who knows? But Rob, can you play this clip? Go for it.
I hope that I hope that the United States and Europe can establish a very close partnership. We obviously are. There's an alliance already, but I'm hopeful that there can be a very close relationship with America and Europe. And I'm hopeful, for example, with the tariffs, that at the end of the day, I hope it is agreed that both Europe and the United States should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone between Europe and North America. And that would be that's what I hope occurs. And also more freedom of people to move between Europe and North America, if they wish. If they wish to work in Europe or wish to work in America,
so now he says this,
be allowed to do so.
Rob, can you do me a favor, Rob? Go online, type in Tesla sales by different markets, Tesla sales by different regions, and then just go to news.
Mm-hmm.
Go to Tesla sales by different regions, go to news, go to the third story, okay? Look at this here. Mm-hmm. Go a little bit lower, Rob. So just right there. Tesla sold 45% fewer cars in Europe last month compared to January of last year. Yep. So you understand what 45% fewer?
And what?
That's not 4% fewer. That's not 10% fewer. So let's just say the stock does bad, but your sales are high. You're fine. It's not that the stock's down. It's the sales are down 45% fewer in Europe than last month. Then BEV sales grew by 37%. That's the China car. That's like a $9,000 car, reaching a market share of 16.7%. And self-charging hybrids are Europe's favorite powertrain type with a 34.9%. So Musk is sitting here. I think sales in China is down 29%, if I'm not mistaken. Europe, he's down 45%. And he's down in U.S. as well. So this is affecting a lot of people that are actual big businesses. They're concerned about what this is going to do with the tariffs. But even Musk, right now, I'll read this. Elon Musk publicly diverged from President Trump's on tariff, advocating at a virtual rally for Italy's Deputy Prime Minister Matteo Salvini. I hope that the United States and Europe can establish a very close relationship. Both Europe and the U.S. should move, ideally, in my view, to a zero tariff situation, which is what he just talked about here. So we'll see what's going to happen there. And then he continues talking about possibility of, Peter Navarro on X writing a PhD in econ from Harvard is a bad thing, not a good thing. And he ain't built shit after Navarro defended tariffs on CNN, saying, we're trying to do under the principle that the president wants to charge those countries what they charge us. So there's a little bit of a rift here with this situation. So we're going to see what's going to happen there. Adam, you wanted to say something.
I just want to get back to one point that Brandon made, because you're a young guy, you're a smart guy. I was sort of a little bit younger than you when I really started investing in the stock market. So are you saying that you have not started investing yet because you're just waiting for the dip? You said I've been waiting 15 years. So you just haven't started investing yet?
No, so I mostly have done day trading type of stuff for the last 15 years, and I have small investments here and there, but like just straight up putting money in the S&P every week, I haven't done that at scale yet.
How have you done by day trading? How's it done for you?
The biggest benefit from it is that I've learned a lot. Like I can't say that I've done like insanely well day trading. It's a tough thing to do, like unless you're all in.
I think you're a sharp guy, but here's where I'll tell you that more is caught than taught. Mm-hmm. So what you're doing is sort of acting on hypotheticals. What I've been able to do and what Pat and Tom is able to do is actually invest in the market.
Yeah.
So actually experience the ins and outs, the ups and downs, the reds and greens of the market. What year did you start? I started in 2008.
Oh, perfect. Yes. Yeah, so
exactly.
It's a little bit different.
Well, no, because it's not timing the market. It's time in the market. If you're sitting around and just waiting to buy the dip, you've had opportunities, buddy. You could have done it you said you started investing in 2009, 15 years ago. You said 2010. Market was down then. Well, you could have done it in 2020. So if you're trying to time the market, you're going to be waiting for the perfect time forever. So it's not about timing the market. It's about time in the market. So, you said something pretty shocking. Like you're praying for a 50% downturn in the market. Well, there's going to be older people out there that are like, are you kidding me, bro? You want your grandma to go poor? We don't want that.
But they stole from us, though.
All right, well, you sound like a victim, and I've heard that before on this show.
No, just the numbers.
But at what point are you going to just buckle down and just say, I'm a smart guy, let me play the long game, and just start investing? Because I've seen so many people do what you're doing, and like, I'm going to wait for the perfect time. There's no perfect time. There's no perfect moment. If you genuinely started investing 15 years ago and gave up the day trade nonsense and just decade trade, you'd probably have tens, if not hundreds of thousands of dollars right now. So for someone like you, buy the dip now, and let's see where it is in 10 years.
So
that's how you invest.
You think
it's a dip? Here's what I know about the market. If you pan out, the American economy, S&P 500 always wins. If you follow day to day, here's what I guarantee. Just because I've seen this 1,000 times.
Go max.
Here's what I've seen 1,000 times.
Go macro trends for 9 years.
It was bloodbath a couple days ago. I guarantee you today is going to be green.
It's up. It bounced back 1,300.
There we go.
Yeah.
Just because I've seen this before. More is caught than taught. I used to look at the market every day. And when it's actually your money and not hypothetical woozies and floozies and woozies, you actually notice, oh my God, I made 20 grand today. Oh, I'm down 18 grand today. I made 50 grand today. I'm down 7 grand today. It's actual money. And you actually learn how to invest in the marketplace. Without that, you're just talking about what ifs. So my advice to you is put some money where your mouth is, put some money in the market, and watch it grow. You can do this.
Would you agree that we've prevented ourselves from having a legitimate recession or even a legitimate downturn for 15 to 20 years?
Here's the challenge that I have. You're trying to solve for what the American economy should do. Don't worry about the American economy. You know whose economy you should worry about? Your economy.
I am. That's why I'm trying not to buy the top.
Okay, but you've been waiting 15 years.
Well, I mean, realistically, I should have got in during COVID, but I didn't know.
What was Dow Jones at 15 years ago, Rob? Just go where Dow.
Macro trends is a good chart. It shows 90 years.
Go to macro trends. Macro trends. So where do you want them to go?
There's a 90-year chart.
So just go to Dow Jones. Just go back where you were at, Rob. I mean, the way you're going is going to take you a minute.
Yeah.
Just go back doing what you were doing. You were fine where you were at. Yeah. Okay. So 15 years ago, does it go 15 years? Yeah, 2006. Go to 15 is 2010. Where was the market at 2010?
It was probably like at 15,000.
Right there. It's grown 300%, Brandon.
Yeah.
Yeah, from that point on, yeah. So I guess maybe like 10 years is better to say, but
okay,
But
where
if
was
you
it
go
then?
10 years, go to 2015. Even 2015, it's 2x, more than 2x.
The whole time that we're pumping QE into the market, so it just like it felt fragile at the time. So like sorry for being skeptical when we're just propping it up through quantitative
Brandon,
easing.
Just to be clear, I'm not trying to rip you one. I'm trying to encourage you.
No,
you're solving for macro trends. Just put your damn money in it and figure it out. One last point, Pat. You'll remember this. COVID happens March. You talked about this. You were on Jesse Waters yesterday. I've seen like incredible takes. Rudy Gobert, NBA canceled, NHL canceled. What's going down? Everyone's freaking out. The market's going down. What do we do? I think the market was maybe at 25,000, 20,000, cut in half. Everyone is like, I should have sold. Oh my God, what should I do? 6 months later, I'm in the beautiful city of Addison, Texas, talking about Dow just reached all-time highs, 30,000, and 6 months later, it bounced back. So it's going to bounce back if you play the long game.
Let's do this, Rob. Go back to and I'm going to make the point here with Brandon for him to consider. Go back to the tweet you had with Peter Navarro and Musk, which I was reading earlier, if you can go to that. Okay, so watch this. Insurrection Barbie, I don't know who that is. Here's Peter Navarro explaining the tariffs, and contrary to the fake experts class that is usually on corporate media, Peter Navarro has a PhD in economics from Harvard. He also is not going to lie to you about what is happening to globalist agenda. Notice how he uses specific details instead of blank statements like chaos agent and destroying America. Do you have the clip, Rob, to
I do.
play it?
Yes.
Play
Hang
the
on
clip.
one
Let's see
second.
what he says, and then watch Elon Musk's response on the bottom. And this kind of ties into what you're saying, Brandon. Go for it.
The economist's tools, because it's based on concepts like export and import demand elasticities, currency adjustments, and things like that. But here's the analytical issue we're trying to do under the principle that the president wants to charge those countries what they charge us. As you pointed out, Vietnam has a applied tariff rate that's much larger than ours, but doesn't come near the tariff we've charged them. So the question is, how do you value the following, Phil? So let me count the ways. You got to value currency manipulation. You got to value the VAT tax distortions, dumping, export subsidies, technical barriers to trade, agricultural barriers to trade, quotas, bans, counterfeiting, intellectual property theft, and all of that. So here's the punchline. If you look at the trade deficit, which every country runs from us, the first thing economists should tell you, ask the next one you have on your show, should the U.S. have chronic and sustained trade deficits?
No, there's a
according to economic theory, they should not. So what the trade deficit does for any given country, it's the sum of all cheating. It's the sum of all unfair trade practices. And in a national emergency where the trade deficit itself is the national emergency and security threat because it takes our factories, our jobs, and transfers wealth abroad, the reciprocal tariff is
watch
that
this.
which...
You can pause it right there. Okay, so you see this. Go back to it. You know who disagrees? Elon Musk. It says a PhD in econ from Harvard is a bad thing, not a good thing. Result in the ego brains versus one problem, right? So now, who's right, who's wrong when you see this here? Sometimes to get, like, for example, you and I talk regularly every day, and I know who the guys are that you admire, the economists, all these other guys that are in that space. Sometimes when you are so well-read, what ends up happening is, what is that phrase? Paralysis by analysis.
Yes.
That you eventually just don't take any action, and you're arrested. You don't even know it. You're living in a prison. That you don't even want to know. Like, for some it's marriage, because you have so much experience. For some it's finances. For some it's exercising. For some it's buying real estate. For some it's having a kid. For everybody it's something, right? Because we have so much information here that we're worried about taking action. But Tom, question. So I'm gonna transition into this next. So I thought that was a great exchange, and I think, Brandon, probably a lot of people feel that like the way you do, and I actually really like what Adam had to say. Are you a dog person or a cat person? We know this guy's a cat person. Adam, I have a special guest here today. If you can bring them over here. This is my number one therapist for the last 16 years next month. This is our buddy Jimbo.
Jimbo.
Okay? Jimbo is going to be 16 years old next month. and he's wearing some. Jimbo, can we show off what you got on? He's got a Future Looks Bright shirt back here, and because it is what is it? The National Pet Day, Rob? Can you pull that up?
Yes, Friday, National Pet Day.
National Pet Day is Friday. We got this gear for you that our merch team thought it was a good idea. Okay, I want to show you this. So if you guys, honestly, if this sells out, I'm going to personally give credit to the merch team to come up with these ideas. And I will say, this is their idea if it goes lights out, okay? Now, what do we have here? A few different things for you to pick from with Future Looks Bright. Frisbee rope toy. This is one. We have this tennis ball. What does it say? Tennis ball sling toy. We have this other one. This is sick, actually, if you look at it. This is the biting, the dog toy, with the leashes that we got with Future Looks Bright on it and Valuetainment on it.
Gangster.
This is the gangster if you're from LA, New York, maybe in Baltimore, pick this up.
Yeah.
We got some of this stuff. And on top of that, if you go, by the way, look at that Yeti one. Can you zoom into that Yeti one?
Oh,
is that like
awesome.
a Yeti, like a Yeti
it's a dog bowl?
Yeah, look how sick that is with
chilling.
Future Looks Bright.
I saw Vinny drinking out of one of those
your
this
dog
morning.
will be excited when he's going through this. Go back, Rob. So let's place an order on one of the things so they can kind of see. Let's place an order on this, hypothetically. If you buy this, watch what happens, okay? So you buy this $15, you add it to the cart. Then it says to you, are you team wolf or team meow? So you're going to get a Valuetainment mug that says meow or wolf, depending on if you're a dog person or a cat person. Obviously, Adam goes with meow and Vinny would go with wolf, but some of us actually like dogs and cats. But anyways, if you got animals, if you got dogs, go place an order for National Pet Day. Future Looks Bright. I never forget one of the shows I watched, cartoons, that it said all dogs go to heaven with the character Charlie. You remember that? What a great movie, right?
Cry all the time.
If you love dogs, you got dogs, place an order. Future Looks Bright, not only for us humans, but also for dogs. If you enjoyed this video, you want to watch more videos like this, click here. And if you want to watch the entire podcast, click here.